Hey, it's Patrick Grosser with the 513 Flat Fee Real Estate Group at Fathom Realty. You may have heard about our full-service flat fee listings through a postcard in your mailbox recently. We'll talk more about those in just a second, but first we'll look at the Cincinnati real estate market news for all of 2023 and compare that to all of 2022. First of all, new listings are down 19%, closings are down 34%, average sale price is up almost 6.5%, average days on market is at 21 days, total inventory right now is at 70 days, while active inventory is at 39 days. It is still a seller's market, but not as hot as it was last spring. So if you want to net the most money when you sell your home, you need a more sophisticated marketing approach, but you don't have to pay a 6% commission to get that because it comes standard with our full service flat fee listings. Visit our site at 513flatfee.com to learn more about our service and to find out how you can net the most money when you sell your home. The hottest topic in the real estate industry last year was interest rates. Right now, Freddie Mac has the average mortgage loan interest rate for a 30-year fixed rate loan at 6.62%. That's down a little bit from last week at 6.67%. Obviously not a huge change, but it is down from peaks where they had it at 7.79% in October. Other indexes had it a little bit higher, around 8%. So you can look at bankrate.com and some other as well. But that's the Freddie Mac numbers, again, 6.62%. So the effect that the interest rates have on the market, we've talked about many different times throughout the year. The higher the interest rates are, the lower the demand from buyers. So the reverse logic would apply that the lower the interest rates go, the higher that buyer demand is going to go, which is going to result in more competition among buyers for the same number of listings. We don't think there's going to be any huge influx of new listings. Certainly folks that have been wanting to make a move that own a home are going to sell their home when they buy a home as well, but that's not adding inventory to the market when they're buying a house and selling a house. That's a net zero for inventory. We also expect a lot of renters that have been on the sidelines that have been waiting for interest rates to come down to come into the market as well, and that will actually subtract from the inventory overall because they're taking one off the market and they're not adding a new home to the market. So the challenge is with new construction, with the builders out there to try to keep up with increased demand if and when interest rates continue to decline, as many economists have predicted that will happen in 2024. So we'll keep you informed about that and what's going on. But right now, inventory is relatively low. It is relatively difficult for buyers to find what they're looking for, but it's not as difficult as it was in the last couple years when interest rates were lower. Again, we expect it to get harder for buyers to find what they're looking for, more competition among buyers if and when interest rates continue to decline in 2024. For sellers, lower interest rates will be good news for them. They've seen in the second half of 2023 as interest rates were at all-time highs, near 8% again. In October, the market stalled out a little bit in terms of buyer demand. A lot of buyers are on the sidelines. Yes, they want to make a move. They want to buy a home in order to make that move, but they don't want to pay 7 to 8% interest. So as we're in the mid sixes right now, some economists predict we'll get to the low sixes, maybe even high fives. With the mortgage interest rates, we expect more buyer demand, which for sellers is going to mean more showings, more offers, more situations where you're in a multiple offer situation. You can leverage multiple interested buyers to get the best price and the best terms for the sale of your home. And we don't expect a large influx of inventory, like I said before. So we do expect that demand's going to be higher. Home prices are going to be higher. In response to that, in the short and the long term, we do expect that home prices are going to increase by more than what they did in 2023 compared to 2022, which was about 6.5%, as you saw earlier in this video. So I wouldn't be surprised to see home prices grow by 10% or maybe even more, depending on how low the interest rates go in 2024. If you have any questions about how you can effectively navigate the Cincinnati real estate market, whether you're buying, selling, or doing both, we'd be happy to offer you some advice, possibly help you directly, whether you're buying or selling a home. Feel free to reach out to us. The best way to do that is to visit our site at 513flatfee.com. Click one of the links there to schedule a call so we can set aside some time dedicated to assessing your needs and to map out a game plan for how we can help you to achieve your real estate goals. I'm Patrick Grosser with the 513 Flat Fee Real Estate Group at Fathom Realty.